Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, I'm only going to be exclusively looking at oil today, especially considering we've seen the unprecedented fall of oil prices overnight, and I'm going to cover a little bit about why it's all happened as well. So stay tuned to have a look and see how we're going to look at oil moving forward. Oil prices so far have dropped below zero. They've hit minus $37. Now, why is this an interesting point to sort of consider? Well, it actually means that if you were to buy a barrel of oil, they would pay you and you don't have to pay anything other than your delivery fees and storage fees. So why is that a problem? Well, simply because the rest of the world has run out of storage and there is nowhere else to really be putting the oil, so you have to give it away. The interesting factor about all of this, though, is that oil prices have got a level of discrepancy. We're seeing that the contracts that expire today have got a negative number going on, whilst for the June expiry, we're seeing a positive number in the $20 realm. It's a little bit more reasonable, it's still not where you'd like it to be. So, regardless of this factor, we're going to have a look at what's led up to it, how it looks on the charts, and I'm going to talk a little bit more about oil production itself. Having a look at the chart here, you can see just how far it's really fallen. It has gone very, very quickly. To move it to the idea of how much volatility we've had, there has been a 400% difference between the spreads on the futures channels. So this is something to very much consider as a highly volatile market, which might leave us with some really good opportunities for trading moving forward. What does it all mean for the producers though? Well, if you've got people selling barrels of oil that you pay you to take it away, then it's obviously not a good scenario for the people manufacturing oil. But the fact of the matter is that if you stop production definitely on major wells, you can cause damage to the wells itself, but you can also then potentially have an environmental impact that occurs. Hence, they will likely see that they will still continue production, they'll try and scale the level of production down, but nonetheless they'll continue to run it so it doesn't get damaged. Now, if that is to occur, then it means they might be quite happy to continue giving away oil and then paying you to take it from them so that they don't have to pay for the storage fees that are associated with it. What does it really mean from that sort of perspective? Well, it's obviously going to be cheaper for them to be able to do it, but in not all instances is this going to be the case. If we look at stuff that's gone on in the US, then we might see that the shale sort of industry dries up and that the wells get cut off because purely they can't afford to be doing it and they've got nowhere else to really store it. So with the storage space running out, oil speculators have also been caught out. You know, when you get the people trading on your oil prices, you won't necessarily just get people who trade it physically. You'll also get people like us who trade it as a commodity or something that you might bet against on the rise and fall or even hedge against other positions. So the idea here being that some of these people who have no intention of ever taking delivery on oil, and all of a sudden they're in a scenario where they have a futures contract for a large delivery that they would usually pass on to someone else who might actually take it for delivery, but no one actually wants to buy it because there's nowhere for them to put it. So they get stuck in a position where they have to then negotiate what they're going to do with the oil to the people that they purchased it from. Now, having a little bit of a think about what's going on and how oil has gotten to this level. Now, naturally, we've been living in a global pandemic, so the demand has gone down. We've seen prices drop by about 20 million barrels per day on that supply side, so the demand for people actually needing the oil has dropped dramatically. We don't need anywhere near as much, and you can even think about this in really simple terms. How often have you had to go and fill up your car in the last month? And how often have you gotten on a plane in the last month? If you transpire that across to your next door neighbor, your neighborhood, your city, your country, and then eventually the whole world, then you can see how we've had 20 million barrels per day of demand basically drop off. And the next part of this is the other parts that are going to sort of impact is how the countries have been playing chicken with one another. Now, naturally, there was an argument or a disagreement between the US, Russia, and Saudi Arabia, and they've all effectively been playing chicken with one another. So how have they been doing this and keeping it up? They've just been constantly producing more and more oil in the midst of a global pandemic, which arguably, either one of these instances, a trade war or an oil price war and a global pandemic, will undoubtedly reduce the amount of demand that you have, because you either have an increase of supply that is just beyond the means that we need. So therefore, they've kind of done the worst situation that's possible in the middle of a global pandemic, which could have done it singly on its own, push the prices of oil down. What does that look like though for OPEC? Because you might even remember I've done a video about OPEC not long ago and they did cuts, and you might actually be going, well, Alistair, didn't they cut the amount of oil that they're producing? So shouldn't that theoretically increase the amount of demand? Well, you would be right in most situations. However, in this situation, as I said before, we have a 20 million barrel per day deficit in demand, but we've only had a 9.7 million barrel per day cut in supply. So obviously there's a 50% leeway, even a little bit over. And that has risen to the problem. We've also been seeing that barrels just being pumped out over and over and over again before that. So the damage was already done and the cut has come in way too late. So what does that mean for the storage side of things? Well, you can't just naturally, as much as I'd love to be able to go and order 10,000 barrels of oil to try and profit off all of this, there are regulations involved. I can't just go and put oil in the pool or in the backyard. And the circumstance of actually buying oil means you have to buy at least 10,000 barrels of it. Case in point, big problem there for us wanting to try and do that. So we have to remain on the speculative side, and I'd probably be sticking away from the future side right now because you don't want to be taking delivery. Having said all of this though, there is opportunity in the air, there is an availability if we keep an eye on what's actually happening with our oil markets. Now, the idea of the storage in oil being a problem is that we're seeing it sort of flow down river, if you will. And the idea of it being flowing down river is that we have an upstream entity and a downstream entity. The upstream side is obviously the people that are digging for oil, tapping the wells, getting and sourcing the raw goods. Whilst the downstream guys are the refiners, the people that are storing the oil and are actually processing it into a usable item that we can all use. Now, why is this a problem in total more so for the upstream guys? Well, the upstream guys tend to make their money on the fact that they can sell the barrels of oil off to the refineries or to somewhere else that's going to purchase it after it's been refined. The cost of refinement is a fixed cost. Therefore, if the barrel of oil is less valuable and you can't get anything out of it, then there's no point refining it. Not to mention the amount of storage that you have for refined oil and even just raw good crude oil is getting into a problematic situation where they're just starting to run out. And we started to see some places in the US and across other parts of the globe where there were smaller sort of storage facilities, smaller refineries, basically refusing to take on more oil because they have nowhere else to put it. Now it's starting to look like we're going to see some bigger entities have that problem happen. Now that's also then going to trickle further downstream. You're going to start seeing the people that actually trade the physical side and transport all the oil run out of sort of opportunity to be actually able to make that trade. We're also going to start seeing it happen with other areas. Now we've already seen the fall of a Virgin Australia. We've seen a couple of other airlines go under, and they rely heavily on crude oil prices and quite often will hedge against the fuel prices to try and balance out their books when it comes to the purchase of aviation fuel and what's actually happening in the oil prices. They try and hedge that bet to try and control it and keep it more fluctuated. To a certain degree, storage facilities also act as a bit of a buffer. If you have a fall in the price of oil because of demand or the rise and fall of demand as well, then you tend to see that even though you've got some in storage, it will just act as a little bit of a buffer on the price because there's still knowing that there is some oil in there so that we still have a little bit of supply there. But in this instance where we're oversupplied, the inelasticity of price has just gone out the window. Usually that buffer that would help control and curb the quick, sharp corrections in price has gone because it's no longer working effectively to actually store oil at all. You've just got it full to capacity and an inability to do anything with the raw goods that are coming out still at this point in time. What does this look like in the long term? I think that we'll likely still see the oil prices rise. Oil prices and oil itself is something that is a commodity that is used across the globe, and unfortunately, from an environmental perspective, we are dedicated to it. What does it look like in the near term? Well, it is still going to go down. You aren't going to suddenly start being able to go and fill up your car for free or even get paid to do it because there is the trickle flow. They've obviously bought their oil from a much earlier futures contract, not today's one, and therefore are still going to be charging the prices for the previous oil contract that they had. Waiting until that comes, it'll take a couple of weeks for it to come in, and we still likely won't get into negative prices for our petrol, but we should hopefully see prices for petrol come down. The environmental impact has obviously been a big thing around the globe. With COVID-19 and the reduction of everything else, we've seen the environment start to improve a lot. But when it comes to the oil side of things, because we are so dedicated to it, it is no matter going to happen anyway. It is going to go back up because we need oil to actually survive and to be able to do our trade. So eventually it will happen. What do I think is going to happen in the immediate term? I wouldn't be surprised if OPEC are already on the phones to one another right now, organising and trying to do another cut. Now, last time when they did a cut, it ended up being about 10% of total global supply. Is that likely to fix the scenario again? Probably not. Even if they drop another 10%, I don't see it fixing the situation. It might stabilize prices because it's matching what the barrels per day in demand are, but it won't actually start bringing the price up. So they're going to have to do much bigger cuts than they've ever done before, even though the last time they did a cut, it was the largest that they'd ever done as a general agreement with one another. So moving forward, I would still be firmly looking for a good solid opportunity here on oil. The way it's going to go over the next near term, because it is so unprecedented, it does make it hard to sort of pick a direction where it's going, but that is nothing new to any of us here today. We've seen so many different turbulent effects occurring due to this global pandemic that it is affecting more than just one industry. And we are going to be starting to see a few more interesting pieces of information coming out this month with a number of companies putting out their earnings reports for the last sort of quarter. We are likely to see at least 1/5 of the S&P 500 companies being their earnings results this year, and some of them may even be deferring what their expectations are until next year, with some funding managers talking about the idea of ignoring all earning potential for this year and to just start looking ahead for next year. Not some advice I would consider looking at, especially if you are uncertain about these sort of things. So if you have any questions about today's oil video or maybe some of the other videos I've done in the past, feel free to send me an email at talktoal@acy.com. And of course, like and subscribe to the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.